Hi, welcome back to Lipper Fund Flows. I'm Jeff Turnahoy. For the week ended March 4th, 2015, the conventional mutual funds industry saw some fairly tepid flows this week in sharp contrast to some fairly volatile moves on the ETF side. Let's take a look at our macro groups and see how mutual funds performed. As you see at the top here, equity mutual funds had inflows about $920 million this week. Taxable bond funds had $4.2 billion in inflows. Munis followed with $325 million, and money market funds shed $16 billion in assets. Well, as I said, kind of a strange week for flows in terms of where the money was going. We saw fairly light inflows into equity mutual funds this week, about $920 million. If we look at the chart here, we're going to see that things were a little bit strange when it came to timing by mutual fund investors. They seem to be a little late to the party. We've had a down week this week after 4 up weeks, and yet now the inflows are coming. So investors who were taking advantage or thought they might take advantage of a little bit of momentum seem to have missed the best part of it. I guess that's another reason to keep your money in play all the time. In terms of where the flows were going, we saw the domestic equity funds had outflows this week, about $832 million. Non-domestic equity mutual funds had inflows of about $1.8 billion, so quite a difference right there. We take a look a little bit deeper. We saw that at the classification level, large caps tended to have the outflows, multi-caps tended to have the inflows. So overall, investors were maybe looking for opportunities outside the U.S., and especially given the news that the European Central Bank is going to start their own quantitative easing program next week. I think investors may have been looking for some new opportunities in Europe. Well, let's take a look now at equity ETFs. They had inflows this week, $7.4 billion, far more than their mutual fund cousins. There's definitely a sense of risk on trading this week. SPY, the big S&P 500 ETF, it had outflows this week, about $988 million. Probably some of that was going into other groups that looked a little more intriguing. Again, some of the other standby, Russell 2000 and utilities weren't looking very sharp either. At the top of the chart, though, we saw where the attention was really going. Spider Consumer Discretionary had inflows of $1.6 billion and a surprising $1.4 billion into the iShares Core MSCI EFA, the IEFA, not the usual EFA. So a lot of movement there for a rather small ETF. There might have been something going on here. We'll follow that to see if anything interesting becomes of that sudden influx of flows to that rather small product. Next group to take a look at is municipal debt funds. Taxable bond funds. Let's stay on track here. They had fairly weak performance this week as treasuries sold off considerably at the long end of the curve. We saw flows go into the Core Plus bond fund area. They had inflows about $1.9 billion this week, so a very good week for them. They were followed a distant second by high yield funds with inflows of about $616 million. The outflows this week were suffered by loan participation funds. Remember a few weeks ago they took in some inflows? Well, that seems to be gone. They had outflows of $201 million this week. Fairly small outflows were seen in the rest of the taxable mutual fund space. Let's turn our attention now to fixed income ETFs. They had large outflows this week. We're looking at about $4 billion in outflows. This is the most outflows they've had on a weekly basis in almost a year. As I said, a lot of selling at the long end of the Treasury curve. We saw Treasury products with all kinds of outflow numbers this week. Surprisingly, TIP, that bond ETF had inflows, even though it is a Treasury product. It's also inflation index. That kept a few people around. They had some small inflows. Other Treasuries were sold, such as the 3 to 7 SHV and the 7 to 10, which is IEF. It had outflows as well, over $600 million. Elsewhere, you look through the charts and tables for outflows, and it was littered with Treasury products. The next group to take a look at is municipal debt funds. Mutual funds here had inflows this week of $325 million. This came on flat performance for the week. Again, munis often follow treasuries, with treasuries taking a slide this week. It looked like the inflows into municipal debt funds may have helped them prop up their performance. High yield products in the muni space took in the most money, about $126 million. Intermediate munis had about 156, actually eclipsing high yield by just a small amount. But like the rest of the fixed income universe on the taxable side, not too many classifications showed outflows for the week. So investor interest in fixed income products, whether they're taxable or tax exempt, is still quite strong. Last group to take a look at is money market funds. Again, $16 billion in outflows this week. Money was coming off the sidelines, probably flying into equity ETFs and taxable fixed income of the mutual fund flavor, if you will. Retail investors had outflows. They pulled about $3.3 billion from their money market funds. Institutional investors, again, a lot of them probably looking at the ETF space, they withdrew about $12.7 billion. So flows have been going back and forth in the money market space. No real direction here to speak of. Well, that'll do it for this week's flows analysis. Join us next week or online at www.lipperusfundflows.com. Thanks for watching.